Now let's do 80JJAA. Now 80JJAA is important. Why? Because even in the optional tax regime, even if you take lower slab rates, that is under 115 BAC, BAD, BAE, you can still claim only this one provision under chapter 6A, that is 80JJAA. So let's see what it is. 80JJAA, remember, it is in relation to deductions for providing employment. So if you as a sole proprietor, as a company, as a business, if you are employing more people, then the government is saying that this person is doing good, so we will provide them a deduction. Okay, so obviously you will say that, ma'am, if I am debit credit, correct, if I am providing any kind of, if I am providing any kind of employment, obviously in my PNL it will show as an expense, correct? My salary expenses that I'm paying or my labor expenses that I'm paying, it will come in my expense section. So how, what else what I'm paying, let's say if I'm paying 1 lakh, I'll take full 1 lakh as a deduction. I'm anyway getting a benefit, that is a proper deduction. The government is saying, no, wait, that is very good, that too you're taking as per your accounts, it is an expense, you're claiming the expense, we are going to give you an additional 30% deduction. So you're spending 1 lakh, you're taking a deduction of 1,30,000. Good. So this is the benefit of this section. So you will claim the amount plus a 30% deduction. Okay, the assessee has to have business income. Assessee is subject to the tax audit, so obviously there has to be a tax audit done. You can't just say that yes, I have provided. You have to do a tax audit. The business should not be formed, and it should not be a splitting of business to show, oh, we have employed no people, new people. It has to be an actual business. And the assessee furnishes, along with the return of income, a report of the accountant of the number of employees, that is in the form 10DA. Okay, deduction shall not be allowed if the factory is acquired by way of a transfer. It has to be a new factory, new employment creation, etc. Unless the assessee furnishes, along with the return of the accountant, as defined in 288, giving such particulars in the report as may be required. So only if you give particulars of the employment, then only you can claim a deduction, otherwise you cannot. Okay, amount of deduction. How much amount did I tell you? 30% of additional wages. So let's say if I'm already providing wages of 1 lakh, this year I increased my labor and now I made it 1,50,000. That additional 50,000 that I'm getting, I will claim 30% deduction on that, on additional wages. Okay, let's say if it is a new company, I am providing employment of 1 lakh. They are saying this is all new, so you can claim 30% on the new people that you have employed. So if it is a new company, all employees or all workmen are new. If it is an existing company, you will compare with the last year and say last year there were 1 lakh, now there is 1,50,000 that I am claiming expenditure. The excess 50 is for new employment generation. Okay, so assessee shall be allowed a deduction of an amount equal to 30% of additional wages paid to the new regular workmen. It should not be badli, it should not be temporary workmen, by the assessee in the previous year for 3 assessment years. So it is not for the year that where you have employed new people, for 3 assessment years. Okay. Now, what is additional wages? Means the wages payable to new workmen. Okay. So in case of existing business, what it will be? Okay, if there is no additional increase in cost and in the number of employees, it will be nil. Wages are paid otherwise than account payee check. If you are paying in cash, then also the deduction will be nil. You won't get anything. So it has to be an increase in the number of workmen, and you cannot pay it in cash. You have to pay it through these modes only. And in case of new business, so this was existing business, in case of new business, the wages etc shall be treated, all the wages will be additional wages. So in the first year, 30% of all the amount that you are paying, you can claim a deduction. Okay. Now it should be for a factory, and factory means as defined under the Factories Act. And regular workman does not include a casual workman, a workman employed through contract labor, okay, workman employed for period less than 240 days, then it is a temporary workman. But what if the I have employed the workman only in February and in March is the year ending? So you will say, ma'am, it won't be possible. So they are saying, yes, we know. So in the next year, when he completes 240 days, then you claim full deduction as though he was employed in that year. Now, what is the intention? The intention of this is to extend the employment generation incentive to all sectors. And this amendment of 80 JJAA was made. So basically, if you're getting new people to work in your company, generating employment, the cost will increase. Okay, however, it is not applicable if you're taking at the high level people at the CXO, CEO positions, the management people. So they have said that you are not paying them more than 25,000 rupees per month. So it is less than 25,000 that the payment that you're making. Okay. Then if you're the entire contribution, so basically they are saying that it should not be a case where the employee is earning more than 25,000. The employee should be earning less, the workman should be earning less than 25,000 per month, then you can claim the deduction. Basically you're taking labor class. Okay. Second, they are saying that the PF entire contribution under the pension scheme, the contribution under pension scheme and provident fund, okay, is not paid by the government. If the government is paying it, then why will they give you a double deduction here? Because anyway the government is giving the benefit to those employees. So you are not paying any pension or any PF, the government is paying it, so there you're saving money, so you can't claim a deduction here. Okay. For whom the entire contribution for employee provident fund and pension scheme is paid by the government, or an employee who does not participate in the recognized provident fund. Okay, an employee who is employed for less than 240 days, that is temporary workman, all of these then you will not get. Okay, so should not. So if the workman is earning more than 25,000, okay, is the government is paying for these schemes, okay, and 240 days or less the workman has worked. So in short, how will you get a deduction? These have to be complied with. 1, 2, 3. Okay, the workman should have worked for at least 240 days or more in that year. The government is not paying for the funds, pension fund, provident fund, and the workman is earning less than 25,000, then you can claim a deduction for those particular workmen. Then similarly, employer's contribution to PF, pension fund, or any other fund for the benefit of employee is not eligible for deduction. And also amount paid. So basically, if the employer is paying for PF, etc., then you can't claim a deduction. Also, amount paid by employer at the time of termination of service, superannuation, is not available for deduction over here. So you cannot say that I'm paying salary also and I'm paying PF, etc., so now give me 30% of the amount I've paid for PF. No. Whatever money you're actually paying to the workman, not to the PF and pension of that workman, you can claim 30% on that. Where a new employee is employed for less than 240 days during a previous year, but next year he completes the 240 days, okay, then he shall be deemed to have been employed in the next year. Fair? So let's just go through this once. What are the things that you have to remember? If you are providing employment, then you can claim a deduction. Okay, for that you should have, assessee should have business income. It should have been done an audit under 44AB. Okay, there should be, along with return of income of accountant in form 10DA, and the business should not be formed by splitting up or reconstruction of an existing business. Then the factories, if the factory should not be acquired by way of transfer, slump sale, etc. Okay, then what is the amount of deduction? The amount of deduction will be 30% of the additional wages. Additional wages should be to regular workmen. Okay, and if it is an existing business, there has to be an increase in the number of workmen, and there has to be payment made other than by cash, so by account pay, check, bank transfer, etc. If it is a new business, from the first year you can claim deduction for 3 years. Okay, and for all the workmen you can claim the because it's a new business. Then you should keep in mind that the salary of the workman is less than 25,000. The government is not paying for the pension fund or provident fund, and the workman has worked for 240 days, is employed for 240 days or more. Okay, then employer cannot claim this 30% on the provident fund and pension fund that he has been paying for the employer, for the workman, employee, etc. And the amount paid by employer at the time of termination of service or superannuation or voluntary retirement is not eligible for deduction. Where a new employee is employed for less than 240 days, then he can claim deduction, the assessee can claim deduction in the next year when the full 240 days have been completed. Okay, so we are done with 80 JJA. The next one, 80 LA. LA, remember, it is for offshore banking units. Now, offshore banking units, I'll just explain to you what is the concept. Offshore banking units are your banks like State Bank of India, okay, Axis Bank, Punjab National Bank, etc. What, and the many other banks, okay, they set up an overseas banking unit. So you'll say, ma'am, is it overseas? No, it is in India only, but it is in these special economic zones. Like in India, we have something called as the gift city, okay, which is in Gandhinagar in Ahmedabad. Now, these banking units, what they will do, these banks like Axis Bank, SBI, etc., will set up their branch in that city, gift city. Okay, it is like how you have a SEZ, special economic zone. It is a financial zone over there, where if you have set up your business there and you're dealing with foreign currency only, it's like an offshore unit. So if it is an offshore unit, what is the benefit? If it is an offshore unit, it will deal in foreign currency. If it is an offshore unit, the laws are very different because Indian laws will not be applicable to it. Okay, there is a special gift city laws which are there, and FEMA and all of these compliances will not be there because it is treated as a foreign banking unit only. So whatever profits these offshore banking units earn, because they deal in foreign currency only, it is not subject to any tax. For how many years? For 10 years. Right now it is 10 years. Okay, let's see. So understand the concept. The gross total income of a bank which is an offshore banking unit in a special economic zone. So there is only one for now in India, it is the gift city. Okay, it is allowed as a deduction of an amount equal to 100% of the income. The entire profit income of this offshore banking unit is allowed at deduction. So all banks have set out their small offices in gift city, where the GTI, being a unit of an international financial service center, we call it IFSC, includes income, there shall be allowed a deduction of an amount equal to 100%. 100% of the profits. For how many years? 10 consecutive years. 10 out of which 10 years? From 10 out of 15 years, whichever 10 years you want. But it is 10 consecutive years. Okay. Now, the income shall be income of this offshore banking unit only, not of the entire SBI and HDFC and Axis Bank, only of the offshore banking unit, from the business with an undertaking located in SEZ, okay, and from a unit of that is in the gift city, International Financial Service Center, arising from transfer of an asset, okay, which has leased by a unit to a person subject to condition which has commenced or after 31st March 2022. Okay, so any profits is exempt, and it includes also transfer by way of transfer of an asset also, being an aircraft or ship which was leased by a unit to a person subject to the condition that a unit has commenced operation. So if there is business in that particular unit, okay, and any income that is arising from the transfer of any asset like an aircraft or ship, that will also be exempt under section 80 LA. Now the last one we'll do, and then we'll do the remaining in part 3, where now this is section 80M. Section 80M is intercorporate dividend. What is intercorporate dividend? I'll just show you by way of an example. A is the holding, B is the subsidiary. Okay, and B has certain shareholders. Let's call it shareholders. Okay, now A has made certain profits. This profit it is going to divide. What is dividend? Dividend is nothing but distribution of profits. So let's say for 100 rupees it has earned profit, and it has distributed the profit and paid this 100 rupees to B. B has also earned some 50 rupees profit, and total became 150. This it divided between the shareholders, the 100 that it received and 50 that it earned profit. So total 150 was divided. Over here they are saying the 150 that has come, out of that 100 we will allow you, because 100 was nothing but a dividend that you gave further. So now you will have to pay only on 50. You will have to pay your tax. We will allow you deduction of 100 of the profit. So your profit is 150, but you don't have to pay tax on 150. 100 we will allow you a deduction under 80M. Okay, let's see. Where the gross total income of a domestic company by way of dividends from another domestic company or foreign company. So A can be a domestic company or foreign company, but B has to be a domestic company. Okay, or a business trust. There shall be in accordance with and subject to provisions of the section be allowed in computing total income of this domestic company a deduction. So how much deduction? This is the total income. An amount equal to so much of the income that is received by way of dividend from this company. A can be a foreign company or it can even be a domestic company. Okay. By way of dividends received from this domestic or foreign company or business trust as does not exceed the amount of dividend distributed by it on or before the due date. Where any deduction in respect of the amount of dividend distributed by the domestic company has been allowed under subsection 1, no deduction shall be allowed in respect of such amount. So if you have already taken a deduction of this amount somewhere else, you can't take a deduction again. Okay, what is the due date? Due date is any date before 1 month prior to the date of filing the return. So normally we file the return by 30th September. Okay, so normally before that you have to take this deduction, and you can't. What is the deduction of the dividend amount? Okay, so we are done. We'll do the remaining part in the next session. Thank you.